Okay, welcome everyone. Hello to the Futex traders and to the wider investment community. This is Miltos coming to you from Futex Live. And I'll be going through my weekly trading roadmap for the week starting the 13th of July 2015. So let's take a look at some of the event-driven risks this week. Obviously, Greece still at the forefront of the headline risk. We're going to be taking a look at some of the weekend news and how that's affected the possible opens. We've seen the last 2 weeks have had some really decent volatile opens. I wouldn't think they'd be as volatile coming this Monday, just because a lot of the banks and most of the markets sort of getting used to the idea of a Grexit, and we're seeing probabilities and chances of it happening by most banks being upgraded from from 20-30% to about 70-80% now. So let's just take a look at what's happened over the weekend and see how it's going to affect our trading plan this week. So the bottom line with Greece over the weekend, we had the Eurogroup meeting on Saturday. Didn't have a deal, so we had no deal. In fact, a lot of the discussions at that meeting were, from what I was hearing, were quite heated, just from chatter on on Twitter, from some of the journalists. And we've seen that basically the Eurogroup's statement is not advocating any third bailout talks until there's several conditions or legislations that are put in place by Greece by Wednesday. Now, these reforms, these legislations that they're looking for, are basically because, like you can see here, many of the Finmans have actually been talking of a great loss of trust in the Greek government. So they're actually looking for a lot more reform, a lot of legislation be put into place, some structural reforms, so that they can make sure that whatever they're agreeing to is actually going to be put into place. And within that Eurogroup statement, we've actually seen the possible option for a Greek so-called timeout from the Eurozone. And in this little statement or short piece of paper that I saw from Germany, really, I think it was from the German finance minister, Mr. Schäuble, was saying he was advocating something along the lines of a 5-year timeout from the Eurozone. Now, in my opinion, I think that's just a little bit ridiculous. If they are going to leave the Eurozone, I don't think they're going to have any intention, you know, to get back. They're not going to go through 5 years of pain just to get back into the Eurozone. So really, it's a Grexit, in my opinion at least. But it seems as if they want to put this, this little clause at the end of it, saying that they could potentially come back in. And this is basically along the lines of what I was saying. I'm not sure if I said it in my roadmap last week or my market wrap, at the fact that if they do leave the Eurozone, the current treaty says that if they leave, they can't get kicked out technically. They can't actually get pushed out of the Eurozone. There is no article in the treaty that says they can get pushed out. However, the Greeks can apply to leave the whole European Union altogether and then reapply to enter. So that could be why they're mentioning this whole timeout. In any case, basically, let's take a look at some of the market implications with this. At the minute, we basically have no deal, and we know that coming into this weekend, a lot of the market participants were looking at the fact that the Greeks had basically they basically succumbed to a lot of the creditors, what the creditors were wanting, and that they were kind of submitting a proposal that was very similar to this proposal that the creditors gave them back in June 26th. So the market was pretty much pricing in a very high chance of a deal this weekend. When I say very high chance, I mean a lot higher than what it was looking like. And there was quite a euphoric move into the close. So what's interesting is obviously we're going to be opening, I think we're going to be opening a little bit lower, not as low as we were opening the past 2 weeks, but in any case, what we've seen is that the markets have already been pricing in, like I said before, pricing in about 70-80% chance for Grexit, and yet we still had a rally in risk towards the latter end of the week. A very strong rally, in fact, very strong rally with gaps to the upside. So Thursday and Friday were Thursday we had a significant move to the upside, and then Friday we gapped up and then continued to trade higher. And like I said, the rally was partly due to the better sentiment of a deal. But what was interesting that early on in the week that we couldn't actually sell off, and that was really interesting because if you watch the price action, especially if you're looking at the DAX or the Euro stocks, A lot of the risk markets we couldn't really sell off, and um, a lot of the movement, the price action to the downsides felt very forced, and there was someone passively just absorbing in a lot of the volume because we were coming into some really big technical levels and some technical levels that I'll show you in a bit. And we went through this in depth last week in the roadmap, and it seemed as if those levels really did work well. Um, so what we're kind of looking at potentially is a market will probably open between 1 to 2% down, it seems, and it's a smaller down relative to the last 2 weeks. The last 2 weeks we've been opening between 4 and 6% down. Um, um, and then if we're looking at, the week ahead, obviously if we do get a deal, something that looks long term with, where they're kind of wiping the slate clean and saying, okay, we're trying to get this whole risk of a Grexit out of the way, something that's really concrete, which I think is a very low probability. Obviously, the Grexit fear is still going to be there because of this lack of trust. But if we do get that, I think we will get some acceleration of some of these risk-on moves because, as I've been saying, a lot of these risk markets, especially the stocks, stocks 50, the DAX, they've been showing a really, a lot of hesitation to move to the downside. It seems like they're really gagging to move to the upside. So what we're seeing now with the IG index Sunday market calls, with the FTSE opening up about, a little over 1% down, 1.1% down. The DAX looking at around 1.5%, so something not too crazy, but again, we're going to be opening with a gap from the close of Friday. And then we've got the Dow opening just short of 1%, obviously not as affected. But this is how we're coming into this week. Now we're going to see how this plays out. Obviously, we're looking for any potential statements tonight or tomorrow. I mean, this the way this is developing and unfolding, it's changing minute by minute, hour by hour. So, even while I'm talking right now, we might even be getting statements and new headlines coming out of the market. So, really stay tuned. I think this week we have to just stay really, really tuned into it. But there are some other events to keep an eye on, and we'll go through this just in a bit. First of all, just to open up the week, Monday, the main event on Monday is obviously the Eurogroup meeting. We've got a Eurogroup meeting on Greece again. That starts around 2 p.m. BST, so British Summer Time. Keep an eye on this because obviously we've got this, well, I guess the next deadline for Wednesday. We keep saying, Saturday's a deadline, Sunday's a deadline, but these deadlines just keep getting pushed. It's just the European way, really. So just expect these deadlines to keep pushing down the road. So long as the ECB keeps the ELA in place, and if the talks are still ongoing, I'd expect the ECB is going to keep the ELA in place. If we get to a point where the ECB feels that the talks have broken down and there is no possibility of anything further, and they've actually already said this, if they feel there's no way they can move forward from here politically, they will start cutting the ELA. So as long as that's in place, I expect they're just going to be kicking this can down the road until we actually get something concrete, or effectively until July the 20th comes, which is when Greece has to pay the ECB, and that's where I think the ECB is really going to get hardlined with this whole situation, which effectively, I mean, we're not too far away from. It's like about a week away, so there is, I think, a more concrete deadline in this whole situation, but we'll have to wait and see. Let's take a look at some of the markets first before we move on to the rest of the week. We'll look over at my CQG, and we'll start off with the Euro stocks, as always. Let's just take a look at this market structure that we kind of looked at this last week, and we looked at it, like I said before, pretty in depth, and we said there was going to be a high probability that we were going to open quite a bit lower. In fact, we did open significantly lower below these two lows. We had gapped down, took out some stops, and then rallied on the day. Effectively closed pretty weak on that day. And then coming into that Tuesday, we came quite significantly lower. Came into some really key support areas. This low at 83s, and we did point out these areas to you guys last week in the roadmap. Rallied significantly again, gapped down obviously on all those Chinese stock market sell-offs, those really big collapses in the stock market. Came and tested this area again, made a low at 80s, and then effectively that was the low of the week. And if we put this into perspective, and we spoke about this last week in the roadmap, and we take a look and put this into perspective for you guys, we were looking at this really big formation in here. We had a big cluster of tops in here. The start, the ECB day there, the open of the ECB day at 32.77, and the highs just there at 32.82 is really big cluster of really important areas. And effectively, that was the low of last week. So if you were swing trading, I think that was a great risk-reward trade. We did say, if you wanted to be getting into these areas, you could have, a longer swing area stop below these 50s, which is that really key blue trend line you can see in here, just coming across. And effectively, your reward is anywhere back into this value zone, which, if you did take that trade, you were very well paid off. So we had, a very decent move to the upside. On Thursday, we trended higher. And then Friday we opened up with a pretty significant gap and then started trading within this gap area now. So the way this is panning out now, obviously, if you take a look at this structure, we've got a downward trending channel, but in a larger frame of things, this looks more like a flag than anything. I still, sticking to my guns that if we start breaking above here and holding value above the previous swing high, so we need to take out a previous major swing high, and then I think this market's going to get the impetus for it to start at least testing, these swing highs in here, these recent yearly swing highs. At the minute, we've obviously got a gap. The gap runs from 34.74 down to 34.33. Those 33s were a very key close. Actually, 32s was the key close and value area low of that previous week. But the gap comes in at 33s, and then the closing gap will come in at 34.04. So these are really key areas. Obviously, if we do open lower and we can't hold a bid above these really key swing highs here between 35, I believe 27, and then 31s, we could see a rotation back into here and then filling in of this gap area in here. Mind you, towards the end of the week we have OPEX, so we're actually seeing recently coming into OPEX, we're getting, a few days before, we're getting a sell-off into that OPEX, and then not much of a sell-off on the actual OPEX. So just mind you, keep that in the back of your head when you're trading this, obviously in the beginning of the week as well. If we take a quick look at the profile, we closed the week, let's just get this into perspective. So we closed the week here, 36.60, just in there. So I'd assume with a 1% down, we'd be opening up, not too far lower, between 30 and 50 ticks lower, depending on how far we do open lower. But let's just say we are opening back within this area, back below these 36.26s, between 36.26 and 36.31. I'd assume, sorry, it's not 36, it's 35. It seems as if this is not really showing up too well, but so yeah, 35.25 and 35.31. If we open up just below here and we can actually hold a bid, like I said before, looking at the candlestick chart, we can actually hold a bid above this area. We could just start rotating, maybe test that value area high of the previous week at 34.98. It wasn't really showing much of a pivot when we did trade this on that day, so I wouldn't give it that much credence. But just keep it in mind, if we do come in here and we're holding back below that, possibly we might rotate and then come and test that other side of the value area there at 34.40. Mind you, again, like I said before, that gap close comes in at 34.33. These end prints, for some reason on my CQG, is not really working very well. It keeps moving my end prints from the previous week to the current week, so just don't pay that any mind. The gap fill, price gap fill, is 34.33s. And then we actually get to the value area of the week last week, which comes in at 34.04, just in there. So those 34.04s are basically the value area low, value area high of last week, and like we said before, is also the closing gap from Friday to Thursday. So this area right in here, I think, is going to be super crucial if we get it here. We fill this gap. Mind you, we did have a buying tail in this area, so we did have a very strong buying tail in this area right at those 34.04s. We also have a close there, and we have the value area high. So I think this area is going to be super key. If we get in here, I'm pretty sure I'm going to be buying this area, no matter really no matter what the news. I think given how sizable this area is, you can have a 5 to 6 tick stop on this, um, and you could be looking for a rotation back up. So I think that's a really crucial area. If we do get there, it could get, you could have a pretty decent reaction off of there. But again, if we do, for whatever reason, breach below here and then use this area as resistance, well, then you're looking at a pretty substantial move back into this weekly value area. No matter what, really, on Monday we're going to be opening outside of last week's value, so just bear that in mind. So we could have that trickle down to come and test it, but we are opening, we're going to be opening quite a bit outside of it. So mind you that we could get a bit of a move lower just to come and fill that in, and just auction lower to see if where the real buyers are sitting in, especially because we haven't actually had that deal yet. We do have these key lows here, 33.70s, with these other lows of 33.68s, if I remember correctly, and then the VPOC of last week comes in at 33.30s, just before the value area low of the week at 32.88s. That key level that we mentioned before, 32.77s, but obviously the weekly low at 32.80s. Now, obviously, if we do get back below, like I said, in here, and we can hold, even below these 33.70s, which really, once we're back into value, auction theory dictates that we're probably going to rotate back to the downside. Your key decision points are your VPOC, so you want to be looking at your VPOC. If we can hold above the VPOC, there could be a likelihood that we don't actually test lower, but at bare minimum, auction theory dictates we auction to at least the highest volume traded node of that value area. But more often than not, I see it actually test the other side of the value area. So that's basically how we're opening up. Obviously, to the upside, we're looking at a slightly different picture. We've got the highs of last week at 35.60, and then 35.84. That's really where we're getting into some pretty significant resistance areas. These 35. Just give me a second here. It seems as if it's budging here. Okay, yeah. So just mind you, these are sixes. So these 36.84s, 36.81 to 36.84. We did see that there was a really key buyer back then when we were trading these levels. So I will remind you guys again, if we get back into these areas here where this value area low of the week is, and at those 81s, I remember there was a really big absorption buyer. I'm going to be looking at that area just to see if there's any sort of reaction in that area. Obviously, if we get back inside here, we could be looking at an auction up to this VPOC of that week, which we had at 36.24, if I'm not mistaken. I'm getting these a little bit mixed up. I think it's because I can't actually see if that's a 6. Yeah, that is a 6. So yeah, 36.36. The VPOC 36.24. 36.36 is actually the value area high of that week. So just bear in mind, if we do get back above these 80s, really key area, because like I said, if you're watching the price ladder, you would have noticed there was a really big buyer in here. So I'm expecting, at least if we get back up to this area, maybe we get a bit of a reaction, at least just a little bit of reaction, because it seemed like there was someone really doing a lot of business at that level. Then obviously within that, we get back to the VPOC, like I just mentioned, and then that weekly high that comes in at 36.51. Right, let's take a quick look over at the bunds now. The Bundi. Let's take a quick look at what this is looking like. So, as we kind of mentioned last week, we've been looking at this pretty key trend line or trend channel that we've been kind of moving to the upside slowly. But we did really, we mentioned and we made it. I think I made it quite clear that the way I saw the price action in the bunds, it felt as if it was struggling to hold that bid to the upside, and it almost felt as if, it was acting a lot weaker than the other markets comparably. I mean, as in it was acting a lot weaker when we were getting sort of these risk off flows. It felt as if it was acting not as strong as it should have been. So it's quite interesting because we've had a pretty significant move on Friday. When we came back below these 52.43s, which we mentioned was a very, very big monthly value area low, we managed to close below that, and then we basically gapped down on Friday, and then came all the way to the downside. We've now broken that trend channel. So what I'm looking at this week is this trend channel. Put very simply, any tests of this trend channel, if we come back into these areas, I'm looking to be a seller. Obviously, we're probably going to open a little bit higher um, on the week now, but it feels as if this market is looking to make its next move down. So, you know, I'm not coming into this week with a firm bias, but I want to be looking for the higher probability um, shorts. I'm not saying I won't buy this market. Obviously, there's going to be loads of opportunities to buy it as well. But I feel as if the better opportunities, if you want to be holding your positions, I feel is going to be to the short side, just because of this reaction at the top here, and then this just really big reversal. Ultimately, I think we're going to have to test this 150.07, which is that closing gap we still haven't closed yet. Um, and we'll take a look now at the market structure on the profile, which I think is going to give us a little bit more color on how this market could trade. Starting from where we basically closed, a long way down here at 150.58s we closed. We know we have just to the downside these 150.46s, which was a really key. Um, um, if I'm not mistaken, there we go, was a very key VPOC of this week. So the highest volume traded price and the point of control of that week came in at 46s. We had a low of this week here. So really, to the downside, I'm looking for this market to actually hold an offer below these 46s before I start looking for that move down to these 50.07s. And then if we look a little bit to the upside, obviously wherever we're going to open, because we're probably going to open a little bit higher after these developments in Greece. The closing gap for Monday is going to be at 150.58. So I don't necessarily have any sort of areas that I want to really sell from a market profile perspective in these areas, really all the way up until these 151.24s, which we can see there's a very big cross of value areas, value area highs in here, value area low in there, value area high in there, another value area low there. So there's a very big cluster of value crosses between 151.24 and 151.32. This area, I'm not quite sure where. If we take a look again at if we take a look somewhere here, this is looking like the touch of this is going to come in around, yeah, 151.35s-ish, or just short of that. So if we take that into account, and we're looking at this profile, that kind of has pretty good confluence for me. If we get into this area, these 151.24s to 32s, and that comes and coincides with a key touch of that trend line, I'm going to be selling, you know, quite heavily. Let's just put it that way. And I don't mind for anyone listening out there. That's my book really. That's really where I'm going to be trading. If you want to stop me out, go ahead. I'm still going to be selling this. I think that's going to be a pretty decent risk-reward trade area, just given the price action as well. Obviously, if we do get back above here and we start trading and finding value above here, I would expect this market to rotate and possibly even test as high as here. Even if we are trading in these areas, we're nowhere near the value area of the week. So just mind you, we have seen this other previous weekly VPOC at 150.190s acted as a really key VPOC when we were trading on Friday, in fact. So just keep that in mind, because these areas are probably going to be, if we do come and test them again, they're going to show similar reaction points. So we got these 150.190s in there. So I wouldn't be too keen to take a massive position here, just because we're back into this value area. But if we get back up to maybe these 150.210s, that previous value area, and we had that high volume node there, 18s, if I'm not mistaken. Yes, 18s. Between 10s and 18s looks decent. 50% of the week comes in at 152.29s. I know I'm just naming levels, and I'm not massively keen on all these levels, to be really honest with you. If we're getting this far up, I think we're too far within that trend channel for me to get too excited for a longer term. When I say longer term, something I can hold throughout the day, short. But I do still really, really like if we get back up here, these 152.43s for a decent size scalp. And the reason being, we did mention it's a massive value area, monthly value area low of it must have been May, so it was the monthly value area low of May 152.43s, and now it's our weekly value area low. So this is great stuff. We've got a really big confluence in this level, and I'm going to be really keen to be active around these 152.43s if we get here. So again, anyone listening in, if you want to push against it, go ahead. I don't really care. I'm still selling this. Um, it's going to be, through that area, I think it's going to be really difficult to ascertain if there's any sort of reason to be looking for shorts. In fact, that's really where I think all bets are off the table. If we get through that area, this could really just rotate through all of this quite quickly. We've got a bit of a void in this area in here, so I expect that to get filled in. We had that previous high at 152 to 91s in there, but again, I don't really see it capping it if we get up here. It's probably going to fill in a little bit of this big volume and value void. You get the VPOC of the week at 153.35s. And then all the way up here, the value area high of the week at 153.97 with the high of the week at 154.24. So, we have a lot of berth to the upside, but, there's quite a few levels on the way up. But what I really would highly advise is don't get caught up in just selling this market all week. If it's just changed its character and it's looking like it's finding a decent bid, then don't stand in its way. Trade with the flow. If the flow's to the upside, trade to the upside. But I do genuinely think there's going to be some decent shorts, but you have to be patient and wait for the right entries and place in the right stops. I think this area is probably the first area I'm going to take in a crack. Then I'm probably giving it a pretty wide berth up until these 90s and possibly in this area. But my real area, obviously, if we get up here, I want to be taking a crack at these 52.43s because it's been acting like somewhat of a pivot, or pretty much a pretty big pivot. If you look at how it was trading on Monday, we couldn't get below this area. Then we kind of stabbed through it, and then on Tuesday we bid up really aggressively. So keep an eye on this area. I think it's pretty important. But ultimately, the first test between these 24 and 32s, I think is going to be really, really crucial to show you what the sentiment of the week is going to be like. Ultimately, to the downside through that closing gap there, we've got the low of this week at 49.86, and then after that, you're gonna probably have to start looking at your candlestick charts. Obviously, you've got below that, you've got this area at 148.94s, and then 148.23 is that recent swing low. And after that, you're gonna have to pull out your templates, people, because I'm not gonna go through that with you. Don't have enough time for that. Alright, let's wrap this thing up by looking at the rest of this pretty little presentation. Just going to really quickly try and skirmish through the rest of the data points and geopolitical events. We've got German CPI, UK CPI, German ZOO, and US retail sales on Tuesday. US retail sales being the main event of Tuesday. So if you're trading on Tuesday, save your bullets for US retail sales. The Fed is data dependent, and if you get big moves in the retail sales, that's going to, might have a shift on whether we get a rate hike in September rather than December. We've got the, just give me 1 second because there's a massive mosquito I just want to take out before he, okay, sorry about that guys, massive mosquito in the room. And we've got the EU finance ministers on Tuesday, so keep an eye on those guys because obviously Wednesdays are deadline for the reforms, so anything coming out on Tuesday is going to give us a heads up. Then we've got Wednesday, pretty action-packed with events. We've got the UK ILO and employment, US PPIs, US empire manufacturing, US industrial production. Those last two not being too big on the data front, but nonetheless it's good to keep an eye on. And then we've got the US DOE, US crude oil inventories. From a central bank policy perspective, we've got quite a few speakers, quite a few little events. We've got the Fed's George, who's a non-voter and a hawk. We've got the BOJ's Kuroda holding its press conference on the rate decision. So we got the rate decision from the BOJ, so keep an eye on that. That's going to be quite crucial to see if we get any action out of the BOJ. Canadian basically the Bank of Canada rate decision, Riksbank minutes, and we got the major Fed yelling. I mean, we already had the Feds yelling on Friday, which she seemed slightly, a tint of hawkishness, but nothing too crazy. She said they were looking for a rate hike, uh, uh, later this year. So any further color out of Yellen's going to be really important with the Fed's Mester, the Fed's Beige Book, and the Fed's Williams. Come Thursday, we've got the European CPI, U.S. initial jobless claims, U.S. Philly Fed, and in the main event of the week, we've got the ECB monetary policy meeting. So what we're looking at this ECB effectively is everything's really going to be centric around Greece. So we are expecting, I think the majority of the market participants are going to be expecting the ECB to be particularly dovish, given how Greece is unfolding. They could effectively mention the OMT or any other backstops to for any risks of market contagion. They really want to effectively show the market that they're backstopping any inflation risks or disinflationary risks. At the minute, their mandate is price stability, and if this whole Greece situation is going to be threatening that price stability, they're going to do whatever it takes because they just went all out, all guns blazing on QE. They can have this tiny little country in the eurozone, you know, ruin their plans to jumpstart inflation. So really, they're going to be as dovish as possible, really, come this Thursday. So do expect anything from them. They could even say they're going to front load more QE in the coming months, just basically just to say to provide more liquidity. And they know, given that even though liquidity is quite dry, that they're probably going to drive the market quite a bit. And we have seen potentially, these past couple of weeks, we've seen the ECB, or at least a really big institution come in. It looks like it's the ECB buying up bonds quite aggressively, and because the liquidity is so thin, they drive the market quite high. And maybe that's something they want to do. Maybe just, especially because the liquidity is quite thin, if they come to market with big size, they'll just suppress rates even more so. I guess artificially so. So I think an announcement of them front loading even more QE, for me, in my opinion, I think we might get a bit of a jitter or a jerk in one direction. And that jerk reaction, I think if we do get, let's say, bunds pop up, 50, 60 ticks or whatever it may be, if they do that, I'm going to be looking for potential fade into that. I think there's going to be a potential reversal because, like we saw last time, we had the front loading or the front loading comment out of the ECB's core, and that was basically the high of the day, and then the market basically sold off for the rest of the day. So I'd possibly be looking for a fade into that, just because it doesn't mean they're going to be buying more bonds. It just means they're going to be buying more bonds now and then backloading in the months after that. It doesn't really change the pace or the amount of QE. So unless they say they're increasing QE, I think a lot of these front-loading comments are probably fadeable. But obviously, on the flip side, if they say, if such and such happens, we're looking to bolster QE by another 10 billion a month, that could be pretty big. And in that case, I really wouldn't stand in the way of the stocks. I think the stocks are going to be just bid for life. The euro potentially is just going to go lower, um, quite a bit lower, I'd suspect. So these are the kind of scenarios that I think I'm going to be looking at. Obviously, the Q&A is going to be quite important because it's really the focal point is going to be Greece, and everyone's going to be looking out for what it is they're looking at for the ELAs. Is there any further detail as to when they could pull the plug? Because they've already told us, if talks break down, they'll drop the ELA. But maybe we can get a little bit more color as to when and how that's going to take place, and what their plan for this is. What's the plan if Greece exits? What are they going to be doing? How are they going to manage this? How are they going to contain this? Any sort of color there is going to be quite important. I think if they do give something concrete, maybe the market gets a little bit more confident, and then you get a little bit more risk on flows. Right. We also have the BOE's Carney after that, and the Fed's yelling again. So the Yellen's basically speaking quite a few times next week. So just keep your ears plugged because or unplugged, should I say, um, uh, to these little events because obviously we're getting closer and closer to September, and if the Fed is actually looking to raise rates, the Fed is going to have to communicate that, I think, well in advance to prepare the market for such an event. Come Friday, we've got the U.S. CPI and CPI core. Again, very very important to look at in terms of um, uh, rate hikes. So if we do get better than expected CPI numbers, we're likely to see potentially T-notes offered. Eurodollars quite offered. Um, Stocks could start offering on that as well. So you could see the S&P start offering down just because of the fear of a rate rise. So look at these numbers because they're going to be really important. With the U.S. building permits and housing starts after that, Canadian CPI core, and then wrap it up, we've got the U.S. University of Michigan Consumer Confidence, which is a preliminary reading. Um, from a central bank policy, we've got the ECB's survey of professional forecasters, and that is basically we're basically looking at what they see or forecast inflation looking like. So the ECB, as it stands, looks at the five-year inflation swaps, and then they look at the SPFs, the Survey of Professional Forecasters, to see what they think inflation is going to be like, and then they build a picture around that. So that's going to be quite important if we get, maybe an uptick in inflation from the forecasters. Couple that with, the five-year fiver kind of ticking up over the past few months. Maybe they're looking at a better inflation outlook, which how does that affect the bunds? Maybe the bunds start offering, whatever the case may be. Keep an eye on these little events. Then we've got the Fed's fish, and then to wrap up basically the whole week, we've got the equity options expiry. So looking at any potential flows into and out of that, and I'm sure a lot of these streamers in the week are going to be going over that quite in depth. From a risk and money management perspective, I'm looking at giving Monday a little less risk just because we only have really one adventure in risk. I know most Mondays I give a little bit more, but it's really only a couple of trades that I'm probably going to be taking on Monday if they come along. On the open, I don't think I'm going to be as aggressive just because I don't feel as if we're going to be opening up in areas where we could see stops. So I'm giving a little bit less of a risk allocation and giving a little bit more towards the end of the week, giving that 10% from Monday, putting it in Thursday, because Thursday we've got the ECB obviously, and then every other day I'm giving about 20%, giving myself a chance to trade every day equally. But really Thursday, whether we get anything out of the ECB or not, I think it could be a good day, a good chance to to see some potential moves. So hopefully we can trade that professionally and make some good dollar. Well, thank you very much, guys, for listening. That was my weekly roadmap for this week. Good luck for the rest of the week. Hope you guys make some good money. I'll be having a stream on Tuesday where I'll be going through a price action video. So anyone that is at Futex, keep an eye out on that. And anyone that's outside, you can sign up for free at Futex Live and watch those videos. I'd highly recommend that you do that if you are a novice and just learning about trading now, especially trading derivatives and futures markets. Right, well, thank you very much for listening, guys. Take care, and like I said, good luck and Godspeed. Take care. Bye-bye.